guys, welcome back. Today we are going to discuss income measurements. How the income is measuring. We will get some revenue and we will reduce that expenses, right? So there are different types of expenses and different types of gain and losses. So mainly here we are going to discuss what is the difference between expense and gain and loss. Maybe we already know, but we have to discuss. This is my RABEEH OVUNGAL. Welcome to EduCafia. Yes, the topic name is income measurement, but we are going to discuss expense, gain and loss. Okay, mainly we have to discuss what is the difference between expense and gain and loss. We know what is expense, what is gain, what is loss, what is revenue. Revenue and expense is nothing but that is a basic fundamental thing of a business. If there is a revenue and there should be an expense. But gain and loss is not like it's not like a daily routine. Okay, expense and revenue is nothing but what we are doing the business. Gain and loss is coming not because of doing the business. It is coming because of other thing happening in the business. For example, I will tell you expense, cost of goods sold. Why cost of goods sold is happening? Because of we are doing the business. Gain and loss is not happening because of we are doing the business. Okay, it's other part of the business. You got it? So the expense recognized or the expense recognition principle states that expense should be recognized in the same period as the related revenue is happened. You got it? So that's there are three types of expenses or three main method of recognizing expenses. First one, cause and effect. Cause and effect. Reason. I mean, for writing the expenses, there should be a reason. For example, cost of goods sold is an expense, right? So who is the reason? Revenue is the reason. Because of the revenue we are writing. Below the revenue we are writing the cost of goods sold. That's what. First one, cause and effect. Second one, systematic and rational allocation. It is an expense which is a systematic expense or it is a rational allocation. For example, depreciation. It's a systematic rational allocation. Asset is allocated to every month or every year. Rationally we allocated. It's an expense, right? Depreciation is an expense. Next, immediate recognition. Some expenses are immediate expenses like estimated expenses, warranty expenses. So many future, if you understood, okay, in future there is no benefit is not to get, then it is an immediate expense. We studied, right? So third category is immediate recognition. First one, cause and effect due to our business. Second one, systematic and rational allocation. Third one, immediate recognition. What is gain and loss? Gain and loss, it is nothing but is outside the company's normal operation. Whatever extra money we are getting and extra money we are losing, that is happening outside the company's normal business. If company having a furniture, if company having some inventory in store, that inventory we are selling and some amount we are getting, that is our business, that is our revenue. For purchasing that revenue, we have expenses some amount, that is our expense. But we having a furniture. Furniture is not our inventory, that is our asset we are using in our office. That furniture we are selling after 1 year or 2 year, 3 year, whatever. Because of that furniture is no more usable for me. That what I will do, I will sell it. So while selling, if I got more money, more than my carrying value that is there in my balance sheet, some carrying value in my balance sheet, right? The carrying value, for example, 14,000. I sold it for 15,000. 10,000 extra I got it, right? That is my gain. But my carrying value is 14,000. I sold it for 13,000. 10,000 loss is there, right? That is my loss. So this is the main difference between gain, loss and expense and revenue. Right? If any asset I put it as for selling, if any asset, if any long-lived asset I am going to dispose, then I have to convert. Now it is in held for use in my balance sheet. So I have to reclassify this held for use to held for sale. If any asset I am going to dispose, the held for use I have to reclassify to held for sale. If all these criteria are met. First one, management commits to a formal plan to sell. Okay, management decided we are going to sell that machine or that furniture. Then this asset is available for immediate sale. Now the asset is available for immediate sale. Then the management need to find out an active program to find a buyer to sell this. Okay, now management is just decided, okay, let's sell it, and not planning and not trying to find any buyer means, okay, you can't convert this held for sale, held for use to held for sale. You have to actively participate, or active program should be there to find a buyer. Okay, so there is a app called OLX. In this OLX, what we can do? We can show this furniture, this machine. We can take a photo and put in the OLX. Then you can convert this held for sale to held for use to held for sale. Then fourth one, the sale is probably within 1 year. The sale should happen within 1 year. Okay, then only you can show held for use to held for sale. Okay, the sale is going to happen after 2 years means you can't show. Then the asset is actively marketed at a price reasonable compared to fair value. The price you should fair value. The fair value of that machine is for example 15,000, but I am marketing 2 lakhs. This product is going to sell. If anybody comes to buy this, no, because the fair value is 15,000 only. Who will come and buy for 2 lakhs? So this is not going to be happen. So you can't show held for use to held for sale. It should be marketed in 15,000. The sale should happen within 1 year. Sixth one, it is unlikely that the plan will be withdrawn or significantly modified. It's unlikely. I mean, it means it should not be, the plan should not be withdrawn. Probability should be there. It's not going to be withdrawn. We can't 100% we can't say it's not going to be withdrawn, but 99% should not be withdrawn. So if all these are met, we can convert in our balance sheet held for use to held for sale. If the sale happened, we got gain or loss or gain, something will happen, right? That we can present in the income statement in 2 sections, either in continuing operation or in discontinued operation. This is we studied, right, in the beginning of this section. First video was balance sheet, second video was income statement. In that income statement we studied this continued operation and discontinued operation. What was that? In continued operation, we are not selling the entire asset, only one furniture. The business is going on. I am having branch in Washington, and I am having branch in Chinatown, and I am branch in New York. In this New York branch, I am selling one of my furniture only. I am not selling this New York branch. One of that furniture in my New York branch I am selling. So in that I got gain or loss. My operation is going on. My operation is continuing. So in my income statement there will be a section continuing operation. In that section I will write that gain or loss. But instead of that, I'm stopped this New York branch. Then what will happen? I have to sell all my assets there. So while selling all these assets, I will get some gain, I will get some loss. That I will show another section, discontinued operation. This is already we discussed in income statement class. For example, Archer company having an 8000 watt generator. They required 12,000 watt generator. What they will do? They will sell this 8,000 watt generator. So now the carrying value of this $14,000 carrying value. They bought this for 65,000. I mean, they held for use equipment in balance sheet. It is 65,000. You can't see this in balance sheet. You have to go and check notes to financial statement. In balance sheet, 14,000 only will be there. So it bought for 65,000, but now the carrying value is 14,000. So the depreciation, accumulated depreciation is 25,000. That's why the net amount of 14,000 is showing in the balance sheet. But the fair value, when checking the fair value to sell this 8,000, it was 13,000. The carrying amount is 14,000. So extra 10,000 I have to charge to depreciation. So what will be the journal entry? Held for sale equipment is 13,000. So the held for sale equipment, it was now held for use. At that time 14,000. But held for sale, my fair value is 13,000. And accumulated depreciation, it is 25,000. And loss on decline of fair value, that is 10,000. Total 65,000 held for use equipment. So whatever in held for use equipment, that is I am crediting and removing from balance sheet. And I am charging to debiting held for sale equipment. Now the fair value is 13,000. Before, there was a 65,000 valued furniture was there for held for use equipment. That I am converting to held for sale equipment as 13,000. Because the balance is 25,000 debited to accumulated depreciation and the balance 10,000 to loss. Now, when the sale happens, sale happened for 28,000. Fair value only 30,000. That doesn't mean that we will get 13,000. Bargaining, negotiation, everything will be there. When the customer comes, there will be a negotiation. So after the negotiation, the sale happened for 28,000. The broker fee 10,000 is gone. We sold through OLX. So for OLX we have to give 1,000. So in my hand how much I received? As cash I received 27,000. So what is my loss? 3,000. So held for sale equipment I credited 30,000. You got it? So this is how the journal entry will be. Next topic is involuntary disposals. What is involuntary disposals? I am not selling the material. I am not selling the furniture. I am not selling my asset. Instead of selling, it got fire. It got damaged in flood. It got accident. Asset destroyed. Or somebody took my asset. Or government seized my asset. Or something natural disaster has happened. What happened? My asset is gone, right? Now still it is there in my balance sheet. Shall I keep it there in the balance sheet? No. I have to remove it from there. How I have to remove? I have to show it is involuntary disposal. I have to show as involuntary disposal as completely as loss. In my balance sheet, one computer is there. That computer, now my carrying value of that computer is 15,000. Somebody came and took my computer. Completely loss, right? Now for my balance sheet, I have to remove that and show in the income statement as loss 15,000. because I didn't got anything. The entire 15,000 is lost. It's gone. But if any insurance is there, I will get that insurance payment, right? For example, I got the insurance payment 16,000. My loss is 15,000, but I got 16,000. Extra 10,000 is got, right? That 10,000 is my gain. No, I got insurance only 14,000. My loss is 15,000. I got only 14,000. 10,000 is loss. That is my loss. So whatever I am getting through the insurance, that is my proceeds. And what is my carrying amount? If my proceed is larger than my carrying amount, then it is my gain. If my proceeds is less than my carrying amount, that is my loss. This is nothing but discussing involuntary disposal. Okay, so this is all about income measurement. What we discussed, just what is expense and three types of expenses. Then we discussed the gain and loss. And gain or loss, one question also we discussed, and this journal entry also we discussed. Then we discussed involuntary disposal. You got it? So this is all about this video, and one more video is there to discuss. So with that video, this section A is going to complete. So see you on that video. Bye bye.